Investors and traders like you and I are starting to freak out in the markets, and equity strategists are changing their calls. They often say when things get really bad, it's time to potentially start to consider the opposite way. And with 4 days down, we've just suffered the longest losing streak of 2023. There were some great technical signs of a potential recovery, but Morgan Stanley's Mike Wilson, one of the biggest bears of this year, says it's going to fade. Today, we take a look at all of the key levels for the US 500 and what this long leg doji means. We talk about yield uninversion, what happens usually after that. It might surprise you. Semiconductors holding the lows so far, and of course, the rise of Bitcoin. Is this foreshadowing a massive move for stocks? Well, welcome back, everyone, to the Daily Show where we discuss stocks, commodities, and cryptos together, including the macro lead indicators and the hottest charts. If you like anything to do with markets around the world, remember to subscribe and, of course, smash that alerts button. Let's begin with the last 24 hours. NVIDIA was the standout, and, of course, energy was the sell-off. And we'll talk more about that later on. In terms of fear and greed index, an update here, we see a 27 on the read, which means that we're basically back in that extreme fear zone. Bullish percentage index has also gone back down to the lows, and it's kind of like now or never for the bulls to rekindle the love of the stock market. Can they do so? Here's a great chart, and we're going to share this quite a few times, I believe, over the next coming months. We could be heading into the next 4 to 6 months away from an official recession being called. Traditionally, when we see uninversion of yields, which you can see here back in the past history, we usually get some kind of recession being called. But more importantly, we tend to get a run up after the uninversion. Now, where are we right now? We're so close, and we'll look at the levels on the charts later on as we go through some of the dark pool volume activity that was happening and everything else. But these levels will matter. You can see there's usually a little bit of bullish activity, if not even quite a few months of bullish activity after the uninversion. And this may play very well into the stats that usually lead us through to the end of the year. What about earnings season so far? Well, it's been okay. I'd say it's mixed. Obviously, Tesla did not represent a good, strong earnings season, but really it comes down to, are they meeting the expectations? If the street is saying you should get this much EPS and this much sales, you better make it. Because if you do not make it, it's -4 and -6 if you miss both across the board. Volatility is high on these stocks, and please be aware of the implied vol moves, which we'll discuss later for this week's coming stocks. Investors out there and traders, are the markets getting cheap? 17.5 on forward PE ratios. Now, you'll know if you've been watching this channel for a while, I love forward PE ratios. It's one of my major indicators when you're talking about long-term investments, because the market does trade in the future, and obviously economists as a whole kind of don't really get it right, but it's a decent indicator. Over here, we're getting a 17.5. The average over time is around 16.8. So it's getting closer to a fair valuation on markets, at least in terms of the averages. What's more surprising, though, is how cheap the S&P 400 and 600 are. They're actually getting close back down to those October lows of 2022. So it's many things. It's markets within markets. And on our Monday stream, which if you subscribe, you can check it out, then we actually talked about some of the sectors that are more likely to go if the Fed does pivot in the future. Bitcoin's back in the news, and for all of the right reasons, I guess. Bitcoin ETF excitement is happening, and I thought we'd revisit a chart that we've talked about a lot. I've been relatively bullish here on Bitcoin, and the reason why is because we're getting into the halving event. Now, historically, this has been the run that we expect, and you can see, even though this isn't quite updated, it'd be more like here right now, we are usually going to expect a rally around this time. It's amazing how everyone forgets something and then it starts to happen. More importantly, though, we might actually get a drop-off still into the halving event of next year. So everyone's getting hyped on the Bitcoin ETF, and I think rightfully so in some ways, and it sometimes precursors the market. So we'll look into a deep in-depth version of that in our next video. Make sure to subscribe for that as well. Most anticipated earnings, we are less than 24 hours away for some big ones. We've got Coca-Cola, 3M, obviously Google and Microsoft. These two here, plus possibly Snap and Teladoc, will tell us a lot about what's going to go on with the markets moving forward. You've got a hypergrowth, you've got a social media companies, and of course you've got the big one, which is Microsoft. If they do not do well, yeah, things are about to get wild. Expected moves from the options market really says that we've got a plus minus 6% on Google. Meta's about plus minus 8%. And then, of course, we've got so many incredibly large volatile stocks. I mean, to move $1 trillion companies by ±8 and ±7 is going to be, a lot of market capitalization. We're looking forward to seeing this one, especially if you're a bull or a bear in the market, to see what people have. I would guess, and you can put it in the comments down below, let's see who gets closest to this, that the bears have increased over the last week. Neutrality has probably dropped off or still remaining fairly high. And I would think the bulls actually go underneath 30%. And that's going to be a good sign that we may be getting close to the bottom in markets. And that even if we do take the low coming forward, we've got some big levels we need to be watching. Let's move over to more chop needed. So this, of course, is an argument for what happens traditionally in new president cycles, pre-election years, all of these types of things. We usually get a lot more chopping over the next couple of months into a drive for the end of the year, December into January into February, and then we go into more chop of 2024. I think 2024 is going to be pretty wild. Kind of like this year, we're going to have big rallies and big dumps and expect it to be one of those trader years. Let's talk about performance moving forward. This is this week, October 20th to 27th, generally, as the stat we pull up here. And you can see that actually the average changes often have been, semi-negative in the past and a little bit more positive as of recent. So this is the week where often you dip into a rally. Now, of course, that's just a stat, but that tends to be what's happened over the last kind of little bit. Here's the expectation of the last kind of 1950 to 2019 period. And you can see here again, pre-election years, we tend to dip off. Where did we just find the low? Did we get it? 24th, 25th. That's been historically the low for markets with rallies from this point. Now, we've had this chart for quite a while on the markets here. It could be that we've just placed it. Here are some other stats, 15 to 3 in similar situations where we've had a really strong start to the year, followed by a really bad 3-month period, which of course was August, September, October. And then we actually get 15 wins to 3 losses over the historical period that we've been looking at here. We also know that Novembers do tend to be okay, but still a bit sideways in pre-election years. Let's move over to gold. Now, this is one that everyone's focused on. I actually think gold might have a pullback, and we'll talk about that later. But overall, very strong signs that it's got a little bit more legs in it. We could be looking at an all-time high moving forward for gold. And we've talked about this. I've got a multi-year target on it for $3,000 an ounce. And it could be the time that it really starts to push towards that. We've already had a big uptick since that occurred. And of course, it's something that we are looking for on the charts. Now let's talk about unusual options and unusual trade volume. We've just had some massive trades here. Triple Q, SPY, leveraged funds. Number 42 on UPRO, SPXL number 9, SSO number 12, SPUU number 2, and TQQQ, obviously a very powerful index that a lot of people use for short time frame kind of trades, number 14. Now, these trades all went through pretty much near the end. And of course, here's just an example here of the Pro Shares Triple Q. You can see some big transactions occurring right near these lows. They're dark pool, they're big, and it could be that they're actually looking towards a buy. It's unlikely these are sells just because of where they occurred and the fact that we took the low, and we'll mention more on that later on, but some interesting stuff coming through on the markets. Let's now have a look at some unusual options activity. We didn't get necessarily a huge day. We were at 37.95. Actually saw 52% calls versus 48% puts, which is surprising. I thought we'd see more puts than calls during the session. And you can see here that we get pretty much across the board some generally fairly large trades. Of course, still so many puts on the Russell 2000, 1.63. This thing is stacked with puts now. I think it's been loading double the puts for almost 2 weeks straight. And of course, those puts have been paying out, but I expect it to create a wall at some point soon where the payout will just be less and less. And I think people are getting super negative on these Russell 2000 puts, maybe too much. So some other ones that are notable that we just need to talk about later on today's chart, although we didn't see huge trade volume, we're going to talk about Apple. And of course, we're going to need to talk about some of the other major stocks coming into this earnings season. Let's have a look at rotation. Now, the last 24 hours versus the last 5 days. Here's 5 days of trade. The markets went energy. They went staples. They went gold, which we knew they'd been doing. Communications, which is totally random. And then, of course, we have some of the other ones. We have a mixture of technology and communications actually holding up. Semiconductors just hit a critical level of demand, which we'll discuss, but TAN, solar, and clean energy, they were getting brutalized. And it was the same on the last session. We basically just saw selling through clean energy. Energy itself sold off very hard. And you'll notice down here, we got a decent amount of defensive selling as well. And it was actually communications and semiconductors and consumer discretionary and technology that led in the market kind of rebounding. And it started bad too. You can see it went bad and then it ended up positive. Now that's an important sign for buyers. And of course, if we keep holding this zone, it's going to be super important. So let's look at the stats. Volatility of the volatility spiked hard on Monday. Then it dropped significantly. That's going to be one of the key things that we're looking at. Another one you'll want to be watching is going to be the MOVE index, which is the bond market volatility. That dropped off a little bit, but it was sitting around. Then we have yields. Now we mentioned yield inversion. So of course, if we load up the US 02Y, all the yields were pretty much down on the session, which helped TLT, Treasury yields. But you can see here, we're looking for this thing to go below 1. And what actually ends up happening is it goes below 1. Markets actually usually rally for a little bit, which would be a good time of year for it to do so based on the stats. And then we usually drop off. So again, 2024 could be pretty wild from that action. Let's talk about treasuries. Have they bottomed? Too early to tell at this point, but certainly something we will be looking at. And of course, we're paying a lot of attention to. Treasuries here, finding some form of base potentially. We've got alerts set at 88.88. We'll be focused on that as a turning point. But yeah, they've been just continuously getting worse. And I'll say one thing about treasuries. Everyone's turned to an idea that treasuries are going to absolutely collapse. That seems to be the story going around. We discussed it in our Monday live stream. I think that's kind of ridiculous. I mean, obviously flash crashes can always occur, but that's the new narrative. It was, oh, treasuries are really safe. It's the greatest thing, to now it's a meme. Everyone hates it. And all of a sudden, in about a week and a half, everybody thinks that it'll never stop going down. That's usually a sign that the faith has been lost in that particular trade. So now we look for the technicals, regardless of how bad it seems in the newspapers and on the general media. And that's, of course, something we do here on the channel. So if you like that type of stuff, we do think a little contrarian when it's necessary to do so. Let's talk about copper. Copper is still in the demand zone. No big moves there. Equal weighted market, pretty sick still. Didn't actually see a recovery on equal weight. So it was just really those tech stocks that kind of rebalanced the market back up, as we saw before. The equity feeds from the Fed, so the injections, were not that strong. They've continued to drop off. Same thing in world index trades. So that's a little strange. I mean, we saw huge injections over here. We kind of speculated something broke. And then since that injection, they've dropped it off. I'd like to see these things turn back up as and if the markets do end up rallying. So we'll be looking at that very, very closely. Dollar index, Dow Jones Transportation Average Index first, that kept weakening. So again, not a great sign for the markets. That's a weak signal. The good sign is that home builders did put in a bullish day. We'll be looking for these two, so Dow Jones and home builders, to find some recovery if the markets do end up finding buyers. And of course, dollar, we are neutral on this. I'd actually be overall negative on it just because it's starting to turn too positive. But as we know, we're at a key critical resistance zone. People are going to be taking profit, and we don't know whether this is accumulation yet or whether it's distribution. So, of course, be careful here on the dollar trades. Make sure that you're aware that you're trapped in a zone that's at an incredibly important resistance. And if we do manage to take highs up here, which we'll set an alert for right now, let's get that alert in for everybody here. If we do that, next level is going to be massive. You know, we're talking all the way back to 110. So dollar would go ballistic at that stage. We'll move over to gold. We kind of speculated the last 24 hours that we'd see some selling around this zone up here. We did it during the live stream. Did we see some? Yeah, I guess we did, but it wasn't super aggressive. I'd like this to continue to make a series of lower highs, so it kind of needs to sell again here. And I'd like it to come back down to this level. Now, stopping a freight train that's in a short squeeze like this is going to be difficult. I'm not negative on gold, by the way. I'm just thinking that it needs a little bit of, something like this. A little bit of a dump back into structure. I'd like it to go to like a 1920, 1930, maybe find some buyers around there. And I did notice in some reports, and we'll see if we can get this into the video, that people had been kind of, thinking that we're either going to sideways or basically down. They were the two main scenarios this week that a lot of people were looking at. We'll see. I mean, trend is obviously only down on the small time frames. The big ones are super bullish. Very hard to fight that. Gold stocks still holding up pretty well. Again, we've got an alert above 30.23. I still think gold stocks are cheap on the market in comparison to spot itself, and we'll see how that holds up. We were, again, kind of indicated here on our thoughts about oil. If you do have shorts up here, smiley face for you. Well done, guys. I'll give you a clap because if you held it, well done. We do kind of look at this now more as a potential swing. Obviously, it didn't quite take these lows perfectly, but it did take down here. So we're kind of looking at 88 being a short zone and 89 being a short zone if you're not into shorts. And of course, oil could be turning. Now, remember, the narrative is that oil is the best thing ever and you should be buying it. Well, we haven't really agreed with that since we came back to this level based on the structure over here. And again, it's just the right time, the right place. Playing stats, you don't always know something's going to happen, but you do have patience to react to certain conditions. And of course, that's what we're looking at, something we do teach on our courses as well over at fxevolution.com. Let's move over to AAPL. So of course, the big stock in the world, the biggest, it did find some buyers. Now, it got a little bit hairy. I mean, obviously, we wanted this price here, and then it came back down. Now, our speculation was, and you can see we've got an alert here, is that we didn't know that a buyer had resumed purchasing Apple yet. Obviously, we expected the sell to occur. That's fine. We got a massive gap. If you bought it down here, I guess you're a BTFD kind of bro, and maybe you did all right. But that's more maybe a guess, maybe a little bit of a hunch. What we'd like to see it do is take out and regain this high. And then, of course, it's looking a lot better towards bullishness. So a lot at stake here for something like Apple. And I do expect it to be really dictated to a little bit by Microsoft, Google earnings, etc. Semiconductors did quite well to hold those lows. You can see here the demand was pretty strong. And if we go to a really small time frame, like a 15-minute, it does look like it kind of wants to put in a rebound here. So we'll see whether it can hold up. NVIDIA was another one, and it came down. You can have a look here in NVIDIA. The head and shoulders that every single person in the world's discussing, usually probably means it won't work. Everyone sees this one, and we just found instant buyers here on NVIDIA. Big sell-off followed by a decent recovery, but straight into resistance at the close. So you can jump into smaller timeframes and have a look at that if you wish to, because there's, of course, some good levels there. IWM Russell, it's bad looking, frankly. Look at that. Looks terrible. No change of trends, just looks bad. If you're a seller, I guess, probably some people would be taking some profits around here. Why wouldn't you? It's a pretty good support. But no signs of recovery here on one of the weakest markets around the world at this stage, which is small caps. They're really suffering due to these higher for longer yields. So that's something we will look at. We'll get the key levels when necessary. Let's move over to the Australian market. Now, how's the Australian market doing? It's okay. It's kind of like holding its own around this demand. I would have thought, and I've said this before, that maybe we'd find a buyer actually right on that candle there. That's actually where I expected to see a buyer. There were no buyers thanks to the US market, and we just kept selling off. So you might have actually taken a loss here already. You got to just, pick yourself back up and say, well, if I'm making 2 or 3 to 1 or 4 to 1 on my trades, then really one loss is okay because you can make it back quite easily. It's all about the replication. It's all about taking very similar trades and, of course, replicating. That's what most traders want to do. At this stage, I'd say cautious. If you're a position trader, I think that some funds will be nibbling at this point because, of course, it's back at that level. But that weekly is, it's a nasty, nasty candle to close on those lows. Let's move over to the German market. It keeps kind of falling off. So the German market has no cool. At this stage, we don't know where it's going to find support. So even though I could say, oh, yes, look at this, or down here at 14, 500, 14,450, or any of these levels, we just haven't seen recovery signs for the German market. CQQQ is similar. We'll wait for more signs there, but it's just kind of hovering around that level, obviously just weakening each day. And then we've got the Qs. Now, did the Qs take the low trend line? The answer is quite simply no, they didn't. Did we see recovery? Well, I'd expect pullback into recovery now. There are some good signs here for the short-dated trader. So you can see, look, everything pretty much we kind of talked about. Once we take that zone, we come up here. The supply here is big, so we know that that's where the seller is. At this point, somewhere in this area, which is going to be, what's that price? Somewhere around 14,550, we're probably expecting some kind of buyer to come in. And if a buyer does come in, they're going to push it back up here. Now, if we get back up into that supply, it could be a take profit. But realistically, there's a good chance that actually we may have put the low in. Notice we did take out our alerts. So this is important. What happens here is going to be super key. And if we go back to the Qs for a second, we put it on a daily, you'll notice that these are all long leg doji. So we've got a high, a low, open and close, kind of similar to each other. In essence, this is like, what are we doing ? Small time frames, there are multiple trade levels. If you took the short at the zone that you probably should have, which was that supply, I give you applause. That's an excellent zone to be having a go at it. And you can see that you've already gone into that instantaneous profit. They say the best trades are the ones that instantly go into profit, yeah? So that was pretty sweet. And I could certainly make a case for this going further negative. I do like the fact that it stole the lows, though I feel like that's a pretty key for potentially moving forward with some type of strength. Now let's load up the SPX and take a look at this on a chart. Again, did the market take a new low? The answer is quite simply yes. Is that a long leg doji? Yes. Do we take the high on a daily close? Will that mean something? Well, if anyone's ever done their doji kind of homework, you would know that if we close above or below, often that means decision made. This means we have no idea yet, but we can see that someone did think there was a buy in there. We do know there were huge transactions. Are they sells or buys? We're probably going to find out in less than 24 hours. And remember, earnings is really going to be the thing that moves these around. So very interesting point. If we do keep moving lower, though, I'm guessing 41.20, 41.50 is the zone we'll find super buyers at. Let's move over now to US 500. We'll just load this one up here. And US 500, you can see, again, the doji on the futures contracts. And if we go to something like the 2-hour chart or the 15-minute chart, actually, you can see, again, it didn't quite actually, the NASDAQ was the better sell as where it got to. But notice it comes back in here. I would have actually liked this to go in here and then get the sell. That's what I was targeting for the S&P. The NASDAQ did it, the S&P didn't. But nice kind of low steal. Obviously a pullback kind of expected. And then if the buy is going to come in, it comes in somewhere around here. Now, once we clear this zone, 42.90, that should be the clear for the bulls to say, all right, let's go. We want bullish percent index up. We want home builders up. We want Dow Jones transportation up. We want VIX getting crushed. All of these things are going to be bullish catalysts. And of course, it's something we're looking at. For the bulls as well, many people will point towards crypto. What a resurgence. Crypto ETF. Wow, that's a big inflow. Now, that's what a lot of crypto fan people were probably looking at, fangirls and fanboys. This has moved super hard, and obviously it could be the start of something big. I saw some people talking about 45, 44,000, some big levels there. It's been consolidating for ages. The trend has remained up. This was where, of course, the shorters were. We cautioned anyone trying to have a go at shorts yesterday in the stream because, of course, there were no signs of turn and the trend was still up. And there you go. There's the explosion of bullish catalysts. Now, sometimes this can, preamble something like a SPX or something in terms of moves. So, some people claim that when BTC goes up, the S&P 500 can go up. Here's November of 2022, and obviously we saw BTC kind of leading there. Does that mean anything? Here's some other periods in time you can look at. But I would say, well, did it really get us out of March? I don't think so. So I'm not going to call it from that perspective in terms of Bitcoin, but incredible recovery there across the board. And something like Ethereum will have trapped a lot of shorts. Remember, I was very negative on Ethereum here as a chart. Obviously, I didn't want to do anything with it. Then it got a little bit better. In fact, this was an excellent buy in here if you were looking at it. And this will have shorts squeezed. So that's why it's pushing so hard. If you're looking at Ethereum, you would say up here is the zone where we would expect the turn to happen. For the news ahead, we do have a little bit of news coming Tuesday. Here's all the information. Big stuff for the US flash services PMI. Then we scroll through and we get Fed Chair Powell speaking. I believe there's some Chinese news coming out as well that's going to be going through there. Then we've got Thursday and we have GDP coming and then core PCE price index on the Friday. If you enjoyed today's video, make sure to subscribe, smash that like button, and we'll see you in the next one. Bye for now.